Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at why the takeover bid for Sydney Airport is not good for investors. Then we'll get into the Australian stock market so I can share with you my thoughts along with where it's heading and answering your questions as well as looking at stocks for you. Hello, I'm Dale Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now, before we move on, thank you for showing your support for our channel and hitting that subscribe button. Now, remember, as you subscribe, click the bell on the right of it so you keep up to date with our latest videos. Also, remember to tune into our live Australian stock market show every Tuesday, 7 to 8 p.m. Australian Eastern Time. Now, this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your questions. There has been an increase in corporate actions over the last month, which is a sign of current market conditions, given that corporate actions tend to increase near the end of a bull run. Now, last week, Sydney Airports was in the spotlight as it had risen over 30% on the announcement of a takeover bid from a group that includes Q Super, IFM Investors and Global Infrastructure Management. Now, the group announced an all-cash offer of $8.25 per share to buy out Sydney Airport, and whilst I believe the offer is low, you can't blame them for trying, as it would make Sydney Airports a cheap acquisition. No doubt investors who owned Sydney Airports prior to the offer would be grateful for the significant rise, given the stock fell heavily during COVID-19 and as a result was trading below where it was 5 years ago and is currently trading below the offer price and below its pre-COVID high of $9.07. That said, in my opinion, the board should reject the current offer because despite trading in a challenging environment with COVID restrictions, it is still a blue chip asset and worth a lot more than the current offer. Infrastructure assets like Sydney Airport are so important for Australia, and many top managed funds and superannuation funds know this and have sizable investments in these assets. Therefore, investors should be looking to get the best result by asking the current offer to be rejected. Whether the group raises their offer or another suitor such as Macquarie comes in with a higher bid is yet to be seen, so I would recommend that current investors wait to see what happens rather than exit right now. For those who don't currently own the stock, I would say you have missed the boat, as the upside potential right now may not be worth it, as any new bid is only likely to be 5 or 10% more than the current price. Now it's time we get into the market, and first up we will look at what were the best and worst performing sectors last week. Well, the best performing sectors last week included industrials, which was up 3.25%, followed by consumer staples, up 1.40%, and energy, that was up 1.33%. The worst performing sectors included consumer discretionary, and that was down 2.67%, followed by healthcare, down 2.15%, and information technology down 1.69%. The best performers in the S&P ASX Top 100 stocks included Sydney Airport, as you would expect, with it up 33.39% last week, followed by A2 Milk up 10.43% and Linus Rare Earths up 8.69%. The worst performing stocks, they included Nine Entertainment, that was down 10.76%, followed by Magellan Financial, that was down 8.39%, and Tabcorp, that was down 8.08%, with Cube Holdings and Crown Resorts not far behind, both of them down just under 8%. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me.
A quick reminder before the video starts. This report is an educational tool, and as such, your personal circumstances have not been considered. We hope you enjoy this week's report.
Well, last week was again a bit of an interesting week on the Australian market, where they're going down and up. We made a new all-time high. Almost made a new all-time high, and then later on in the week we actually came down, and it was just almost like a tale of two cities. Part of the week it was bullish and part of the week it was bearish, but it's not really going anywhere. So let's go and have a look at the charts and really see whether it is starting to its run down or whether we do need to expect that it's going to jump up in price. So let's grab the screen. At the moment we've got the weekly chart up on the screen, and I will show you the monthly in a minute. I just wanted to get onto the weekly chart for you at this point in time and just show you what's what's happened the past couple of weeks. Obviously, this is our all-time high there back mid-June there, with the market being at a high of 7,655.9 points. Then we had a big week here, so it really did tank a little bit this week, down a 156-point range there on that next week. They're closing right up here near its top, which was maybe an indication that I thought, well, maybe it might go through that previous high, or the high from the previous week, but it didn't. Indecision reigned the next weck, where we're seeing the bar almost opening up and closing at the same price. You see that it opened at 7578 and closed at 7587, just 9 points higher. A lot of indecision. And then here last week we can see we opened up, traded right up to that high there, and you can see the high of 7654 points. If we go back here, 7655 points, just 1 point below the all-time high. So we almost made a new all-time high, but we also went lower than the week before. You can see the low there of 7498.9. The week before, 7506.3 points. So we went higher and lower than the preceding week, and more importantly, the close is what we really need to look at, because there's an old saying that the amateurs open the market and the professionals close it. And so what we're seeing here is that close there is the lowest close we've had since over here, which was right at the start of June. We can see that 7543.3 points it closed that week. And here again, looking at that, so you can just see the comparison, 7545 points. So closing just a tad higher than what it was through here. So we've had 1, 2, 3, 4, 5 weeks ago. So we're closing around where we were 5 weeks ago. It'll be interesting to see whether it's still going to come back this week down. Now, it's going to be interesting to see what happens on the US market as well, because they're moving into second quarter reporting. So we may see some volatility this week. If you're getting better than expected reports, we may see the US market jump up, and it might take our market with it. We might see this week as an inside bar, or may even move up and break that high, but I'm still thinking our market really does need to come down a little bit, because you can see volumes are still reasonably good through here. But I do think our market does need to come down into its yearly low, and we may be a little bit more counter-cyclical to the US. And I'm just going to show you last week, how last week unfolded. Here's Monday. Tried to push up, came back and really closed where it opened. There's Tuesday's very bearish bar there down. It's had 88-point range, closing right on its low. Wednesday it did the opposite, closed on its high, a big bar there of 79-point range. Then Thursday it pushed up, made that 1 point off the all-time high, then came right back but later in the day, and then Friday quite bearish. But came back later in the day to trade a little bit higher there. If it had closed right down this area here on that low of 7498, then I'd be a lot more bearish for this coming week. But right now, whilst I do think our market may tip over a bit more, but we've seen that through here. It didn't tip over. It really didn't tip over through here, and whilst we did get a bit more through here, it was just really sideways move through here. So this could be just another sideways move before a move up again. But again, we are overdue for that yearly sort type of low. But let me go on to the monthly chart just to have a bit of a look, and you can see how the monthly is panning out, and it really is still tracking around that dash line that I've had there for a few months there. But we've got 1, 2, 3, 4 months then that the market has closed higher. So we are due for a pullback on our market at this point in time, but it really is we need to be careful about what we're actually doing, because with the market at the moment, and this is what I keep saying to people, you don't buy the market, you buy stocks. So whilst the market gives an indication of the overall psychology of what everybody's thinking about the market. If it's going up bullish and everybody is bullish, then stocks will likely to be rising. And if the market's going down and everybody's bearish in their thinking, or the psychology of the market is more bearish, you're going to find more stocks going down. Now, you're not going to find 100% of stocks going up in a bull market, and you're not going to find 100% of stocks going down in a bear market. It's probably about 60-70% will be going up or down. But again, we know that materials in the financial sector, if they're both going down, it will take our market with it. And inversely, if they're both going up, it'll take our market with it. So they're the stocks we actually need to look at. But again, with your stocks, even if I'm saying the market's going to fall quite heavily, it still doesn't. It's not a sign for you to sell your stocks. It's basically if the stocks tell you to go down, they're going down. That's why we have stop losses and trailing stop losses. If the market's going up, just stay with it. If the stocks you own are going up, just stay with them, and place an exit strategy underneath the rise so that you can protect your profit or your capital. But to me, right now, there's not a sign for you to anybody to exit the market unless the stock you own is telling you to get out. And because it is possible that we could still break through that all-time high and go, because if the US market does take off this week on reporting season, let's, for example, see the big financial stocks are starting to report this week in the US. If they really beat expectations by a lot, we might see a push through with the S&P 500 and the Dow really pushing through. And if that does, it might drag our market up with us and we might get another burst. So right now, to me, it's about sitting on your hands a little bit, looking at the downside, making sure you're protecting any downside moves on your stocks. Looking at taking new positions, I would be a little bit more careful about taking new positions. I wouldn't just be buying because something moved up. I'd want to see to make sure it has got some strength and got some legs in it, if that makes sense. If you don't understand how to do that, then maybe that's a good indication for you to get some education and work out what the value of a stock is and whether it's going and how far it's likely to travel if it does go up. But right now, it's more about, I would prefer people just to sort of sit on their hands a little bit and just protect the positions that they've got. But anyway, that's my take on the market. But let's now get into your questions that you've asked me. The first question we have today is from Glasgow Celtic Boy, who's a regular contributor to asking questions. So thank you very much for taking the time to give us your questions. He says, "Hi Dale, I've been placing stop losses within my brokerage account and finding it interesting that you prefer to manage this manually." Yes, I do. It was a thought that crossed my mind when I first started using stop losses after reading your book. I'm a person that only looks at my trading account once or twice a week, so wouldn't having an automatic stop loss be better just in case one of my stocks plummets on some bad news? Or is there a technique that can be used that alerts you when one of your stocks drops heavily that you can go online and start to manage the situation? I'm very interested in how to manage this risk if I decide to go with the manual option. Cheers. Really, really good question, and it came up because of what I was talking about last week on my report. So if you missed what I said last week around stop losses and what I personally do, I actually said I do not ever set stop losses into a broking platform, and that's because I do have stop losses, and I really employ people to use exit strategies and stop losses. And I know I've talked about stop losses before being an initial stop loss, which is the stop loss you initially set when you first buy. But after that, once you're in profit, then you have trailing stops or exit strategies that you might use. Now, what Glasgow Celtic Boy is talking about, he watches the market a couple of times a week, and he's saying, well, what if there's an announcement and my stock tanks? How am I going to get out if I don't have my stop loss set into a broker platform? And to me, it's quite simple. It is, if that's going to happen, then you're choosing the wrong stocks, because going back 25, 30 years of I've been trading, it's rare for me to find a stock that I own that actually happens to. And I know it's a fear that a lot of people have. They go, they set their stops really, really tight. They put them into the system in case an announcement happens, because they see announcements happen regularly on the market and stocks do fall away. But it doesn't happen to the stocks if you've got good stocks and you know what they're doing and you've analysed them properly. If you're buying the wrong stocks, you might find that happens to you a little bit more often. In fact, the opposite happens to me far more often. And I know if you've watched the live show a couple of weeks ago, I talked about a stock called Animos. I think the stock code was AMS, and I'd been watching that one. The day I recorded it, I said that's a hot stock tip from our live show that we do every Tuesday night. And the next day they announced did their financials. They announced financials and really good reports, and the stock gapped up, and was up 28% in a couple of days. I find that happens so much more often than the opposite, and in fact it's probably like 10 to 1 that happens to me of stocks that I'm buying, because I'm looking at them, analysing them, making sure I'm buying good quality stocks and analysing stocks, and the opposite, the announcement's positive, happens a lot more than negative. It's almost rare. I think it's only happened to me less than a dozen times, probably more like 6 times maximum in the whole history of my trading. So, and even then it's not too devastating, because generally the stock will already told you to exit or be alerting you to being exit. So how do you manage stop losses? If you're only looking at the market once or twice a week, that's fine. I only used to, when I was first doing this, I used to look at the market once a week. That was it, and that was on a weekend. I'd set my stop losses, I'd write them all down, and then I would watch it. Now, I know somebody mentioned in the comments about some platform being the best trading platform out there because it does all these automatic things. Look, mate, that's just personal opinion. I wouldn't use that platform myself. It's just not something me as a professional would actually use. And automatic triggers are not something that I necessarily would use. Just because a stock's a platform says, it's triggered this or triggered that, doesn't mean me to exit, because all too often with stop losses, it's the fear of that losing that gets into people's minds. And I know so many times, I think I mentioned it a couple of weeks ago, a stock that I owned, the price had come down and I was going, okay, I've got to exit this stock if it does this little X, Y, and Z in the next week. And it got close to my exit, and then all of a sudden it just took off and it went up 20% in the next couple of weeks. So, and all too often people don't give stocks that flow because they don't understand how to, I'm trying to keep this simple, if that makes sense. The stuff I do on this show and the stuff we do on our live show is just really, really bare bones, basic technical analysis. Even then, some of it's just our opinion based on what we're seeing, and we don't put a lot of tools on it for you because we would just confuse people. But if you want to see my charts and Janine's charts, there's a lot more analysis going on in the background for us to say where we think a stock's going to go to. So that's why I'm trying to keep it really simple. But looking at stocks, I know when I think a stock's going to go up, and I know when I think it's going to go down. But at the end of the day, your stop losses are set at a point where that gives you enough room for that fluctuations up and down. So I would still just, if I was you, Glasgow Celtic boy, I would just set my stop losses. If I've got good stocks, if you're confident you've got good stocks in your portfolio, you're confident they're more bullish, then you have nothing to worry about. Whatever exit strategies you're using, if you've got exit strategies, whether it's a trend line that you've learnt out of my book or something else, stay with it, because I guarantee you're going to find there's not an issue with these announcements. If you've got good stocks and you're managing the right way, you'll never get bitten with that. And I know that's easy for me to say because I'm the experienced trader. I'm not saying you're not, but I'm an experienced trader and I've been doing this for so long. It's not an issue to me, and I will never go and start putting stops on a broker's platform, because you are, like I said the other week, you're actually showing them your hand and you're allowing them to be able to trade against you. So, but good question, and thank you for asking the question, and keep asking questions, which is really good, because the more you learn, the better you're going to trade and invest in the marketplace, and the better everybody invests, the better the market is. And that's really why we do these videos. Moving on, we've got a question from somebody, hopefully I'll say this right, Shikar, hopefully I've said that right, who says, "Hi Dale, thanks for the video. Could you please share your thoughts on BET? I've purchased them in early June." So let's go and have a look at a share called BET. I'll just bring it up on the screen so I can have a bit of a look at it. That is, you can see that on your screen right now, BET. Been beautifully big rise through here. He said he's just bought it recently, so early June. I'm not sure why you would have bought it in early June. I think that's I think you're a braver man than I for buying it there, but I can understand possibly why you've bought it, because you thought it's possibly cheap. I mean, it had fallen very, very heavily from that high there down in there. That's, if we get that there, you can see there's a 39% fall. So I'm assuming you bought it somewhere around, if you said early June, somewhere either on that fall or there because you thought it was cheap. If you did do that, then you've made an unwise decision. In my book, it's just, there's no reason to me to bought this stock. I would have bought this stock somewhere back in here, not up here. There's no reason to have bought this stock even after that big 39% fall. And right now, I can't give you good news. This stock looks like it's going to fall away, so I'd just be protecting my capital. And I'd be drawing a line in the sand, mate, and I'd be saying, where is it? If it falls below the low of this bar here, which is 2 weeks ago, which is $1.01, I wouldn't be owning this stock, but right now it does not look good. And again, you may have, and I'm not trying to be rude to you, I'm sort of suggesting good trades come from having good entries. But you make the money when you make good exits as well, because a lot of people guess at buying because they think something is cheap, and you should never, ever, ever buy a stock because you think it's cheap and maybe somebody's in a forum or you had some video, and this is what I see a lot of people do. They watch all the videos of people saying, here's the four best stocks to buy this month, and I see so often those videos on YouTube get the most amount of views. It's really clickbaity, and the person doing them gets advertising revenue from that, or share of the advertising revenue for that, but it doesn't make it a good tip. And the answer is no, because it doesn't matter how many tips you get. If you don't understand the market and how to invest and trade yourself, you will make mistakes constantly. And I know that's for a fact. All the research, even the research I've read throughout the US over decades, constantly when they look at stock tipping from experts, I'm not talking about YouTube people, I'm talking about expert analysts who are putting out reports that people subscribe to. Every single research report I see on those is the experts generally get it right about 50 to 60% of the time. A good expert, 60% plus. Most of them are 50 odd percent. And the thing is, it's not about whether they get it right or wrong, more than 50% or not. It's about what are you doing with that knowledge. And just buying into a share because somebody said, hey, I think this is a good stock, doesn't mean you're going to make money out of it, because it could be great for a couple of weeks or a couple of months, and then it'll turn south. And if you don't know how to exit and you don't know why you're buying into it and why you're trading it and having rules around that, you will still lose and you'll still have a poor performing portfolio. And that's something I've been seeing for nearly 30 years that I've been around the marketplace. Is so many people just rely on stock tips and they still have average returns because they don't know how to exit properly. And when they're entering, they're often not entering at the right time. And I think that's exactly what you've done. You've just not entered at the right time. And right now you've got your money at risk. And I would just set a stop loss underneath that at the moment. Right now, you're probably not at too much of a loss based on where I'm guessing that you entered into it. But just please have a better entry strategy. That's all I'm suggesting. And then make sure you protect yourself by using a stop loss. But thank you for asking your question. Next question we got's from Brat's Babe, who says, hello Dale, can you please look into Boral? It has reached a new all-time highs over the takeover price of $7.40 that Boral keeps recommending to reject. I do hold the stock and I'm in a decent 26% profit and have a stop loss strategy to sell if price reaches $7.14. Where do you see this stock headed? Would you hold it till it reaches my stop loss price, or get out of it now, or ride the wave which may take it higher if I think it's at the crossroads where it can go either way up or further down? Thanks for another great show. I'll have a look at that for you, Brat's Babe. So let's bring that up on the screen right now, Boral, and have a look at it. Obviously, you're saying there's a takeover bid, and you can see a couple of weeks ago it did jump up through here. On that bar there, on the news of that, you can say that it did make a new all-time high last week at 7.41, so it's around its bid price. If the bid was accepted, then I would have just exited. That's my strategy, because if the bid's accepted, it's not going to grow anymore. But right now, as you're saying, they're suggesting it should be rejected, so they're expecting, or they're hoping the bid would be up. But don't expect too much more in a bid. You generally don't get 25% more in an extra bid, because the company, the ones wanting to take over another company, generally they're pricing it so they get a good deal, but sometimes they might have a slightly better bid in their mind, but it's not going to be huge. It might only be 5 or 10, maybe even 15% better, but not too much. But there is downside risk. I have no idea why you've got $7.14 as your stop loss, because it makes no sense to me that $7.14 would be a stop loss for you. I can't tell you where this stock's going right now, because it's when you've got a takeover offer on a company, things start to go out the window a little bit in terms of technical analysis. The upside potential is only there if there's another bid comes out, or somebody else comes into the bidding war. So therefore, the first bid is upped, or whether another company comes in, and then I would suggest it may only be 5 to 15, maybe even 20% max, I would say, anybody bidding further for that. So therefore, the only thing is a little bit more downside risk if the bid is rejected and everything, it might just come back to normal. But I think it's not on a steady, beautiful run, so I don't think there's any two issues to be worried about here. So again, I don't know why you've set $7.14 as your exit strategy. I'm not sure. I can't see rhyme or reason for that, and I'm not trying to be rude to you. It's just I don't see any reason why that would be your exit strategy. But again, if everything's been rejected, then you hang on to see if there's another bid. If there's not another bid, then you need to make that decision. Do I want to continue to hold or just wait? But right now, I think I'd just be sitting on this stock and waiting for another bid. And if it doesn't come through and everything gets rejected, then I think I'd still continue to hold that stock because it is a great looking stock. But thank you for asking the question. Next question we got from Freya, who says, "Hi Dale, great show as always. Can you please have a look at Nine Entertainment Group? I bought it at $3 and it started falling since then. Is there some upside or should I get out before things get worse? Love your work. Thanks, Freya." Thank you, Freya, for the kind compliments. And I believe it's probably your first question. I don't remember having you on the show. And thank you very much for taking the time to ask the question. So let's go and have a look at Nine Entertainment. I haven't looked at this for a while on the show, I don't believe. So let's go and have a look at that. Obviously, you bought in at $3, somewhere around in that sort of area there. I'm not sure which week you bought it on and what rules that you did buy it on. But at this point in time, if you bought in at $3, let's go to $3 there. Okay, so looking at that, it's pretty close to a 15% stop loss that I would suggest. But on the rules that we teach, even in our basic course, I reckon I would have been out of this stock already. It's not good news at this point in time with this big drop through here, because we're looking at even, if we go back to this sort of high there, it's really had a bit of a hit. It's blasted through all of these sorts of lows right there. So at this point in time, it's not good news for you because of the big strong week last week. You may find it might only fall a little bit. It might only fall down into this sort of $2 area, between that sort of $2, $2.50 area, and finds a support. But then do you take the risk of doing that? Right now, this is a weak looking stock right through here. So I don't really have any good news for you at this point in time, Freya. I'm sorry about that, but generally people do start emailing in when they've got a stock and they're losing money on it to work out how to exit, and that just shows you how important it is understanding what to do. I know a lot of people, they buy stocks and they read reports on them or they watch videos, as I was talking about before, and they go, and we have that mindset, we're going to make some good money out of this stock. Whilst we know the stock can go down, we don't think that it's going to do that. But then it's always, you need to plan before rather than after. And so right now, I don't see any good news for this stock for you. I'm not saying it's not going to stop and find support where it is. I'm just saying right now that I would have exited this stock already if it was me and I was trading this stock. I don't know what you're going to do. I'm not giving you financial advice about what you should be doing. I'm just saying right now it doesn't look good, and you need to decide what level in the sand that you're willing to take for any further falls from where it is. And if it does show some support this week and start to move up, if I was still in it right now and it started to move up this week, I would stay with it as long as it's going up. But if it did show some weakness, I would be exiting. That's my thoughts on that. But again, you need to make that decision for yourself. Not just based on what I'm talking about, but do your own research and work out what your own strategy is. The next question we've got is, I'm going to struggle to say this one, I think. It's Doluri11. I'm not sure what your name is, but that's the thing that you've put on your question to us. You've said, "Hi Dale, I bought 60 shares at $70. Should I sell, make some profit, or wait? What is the strategy to adopt? Thanks." Here we go. Shyam is your name. Hi, Shyam. You should know that already. And if you've bought into the stock, there was a strategy for you to buy into the stock. So why don't you have a strategy for exiting the stock? And that's the question I need to ask you, because again, you only take money when you exit. And so whilst your money's on the marketplace, you don't own it. It's not yours. You can't affect it. And so the only two things that I can do as an investor or a trader is to make a decision to buy or make a decision to sell. And if I'm making a decision to buy, then I need to understand what my strategy is already about what I'm going to do with this stock, how long I'm going to hold it roughly, how I'm going to manage the trade as it moves up, or what am I going to do if it moves down. It's always that what if. And I know occasionally I get somebody making some stupid comment on YouTube going, well, you're saying it could do this or it could do the opposite, like, pick a side. And I went, well, no, that's not what it's about. Understanding the market is always having two sides to the story. If a stock goes up from here, what can I do, or what should I be doing? if the stock I own falls from here, what should I be doing? You should always have two sides, understanding what you'll be doing either way, whether the market or the stock goes bullish or whether it goes bearish on you. Having one side is just not enough, and you should always, because you don't control the market and you don't control the stocks. And that's what I was saying is I can only make a decision to buy or sell. When my money's on the market and the stock is trading, I can't affect the price of that stock. Only the market can. So because I don't have that control, that way I have to have a two-way, double-handed answer is, what if it does this or what if it does that? And I need to have the answer to it. Let's go and have a look at the chart anyway, and I'll give you my thoughts on it right now. So let me bring up Xero here. You bought it at $70, so you've made a good amount of money if you bought it down here, and a perfect little time to buy it down around that sort of $70 mark. So I'm assuming you bought it, pretty much off the COVID low, which was a gutsy move at the time, and a lot of people have made money in this last 12 months because of it, and it's been because of such a bullish market, and it really was a surprise that the market went that bullish, and all the experts are saying this, not just myself. But you've been through the roller coaster more recently by looking at this stock. If you go here, you've had a big drop here of over 33% through there that you've sat through, and simply because you didn't have a strategy in my bet. Now you've seen it's risen 41% and you were getting excited here. Then the next part of the roller coaster goes down again, and it's gone down 24%. And the last few weeks has been bearish, and you're not sure how to handle this. But all this is happening is it's just normal stuff to me. Right now it looks bearish, and right now it hasn't. If I own this stock at this point in time, there's no signal for me to exit. The exit signal for me was back in here. There was a couple of exit signals right through there from our point of view and what we teach our students. So we wouldn't have played for the last sort of 5 or 6 months on this stock in this roller coaster ride. But right now I would be setting a line in the sand of what I think is be a good place for me to exit. But technically it's been weak for the last couple of weeks, but it doesn't mean it's going to fall very, very heavily at this point in time. If it continues to fall, you need to know where you're lying in the sand is. What point are you prepared to hold on to it as it falls away before you decide to exit? But because you're not in it, I don't need to talk about the other side. But what if it starts to go up this week? What are you going to do? What if it moves up and goes through that previous high, but doesn't go higher than the all-time high, and then it turns around and goes down again another 20 or 30 or 40%? What are you going to do then? So these are the questions you should be asking before you get into the situation, because all too often investors and traders ask the question after they're in the situation already and they're emotional about it, and that's not the time to do it. Always have your strategy written down on a piece of paper before you get into it. What if it does this? What if it does that? What am I going to do? And then all you do is pull out your piece of paper and you read it and you just do whatever you said, because they're the decision you made in a rational state prior to being in the emotional state where you're losing money or you're making money if it's going bullish for you. So just make sure you do that. But thank you very much for sending your question, and thanks to everyone that did actually send in a question for me to answer. Now, we can't answer everybody's questions or their emails every single week, but to give yourself the best chance of having your question answered, basically you need to be a public subscriber to our channel. So if you're a public subscriber to a channel, I'll put you up straight away first. You'll be the questions I answer first. Also, put some thought into your question rather than just asking, well, can you look at ABC stock for me? Put some thought into it. Why did you buy it? How did you buy it? Like some of these people are asking, what are your thoughts around that stock? Start thinking about your strategy and throw them to me, and then I'll confirm your strategy or not, or I might enhance your strategy for you. But if you do have a question you'd like me to answer, click the subscribe button now and stick your questions below, and I'll get to them next week. Now remember, here on this channel we do these Monday market reports each and every week. We also do our live stream every Tuesday night 7 to 8 p.m. So remember, hit the subscribe button now, click the bell on the right of it so you know when we upload new videos. But that's it for me. I'm Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.